Hello friends, welcome back to my channel Infinite Trade. My name is Robin and this video is on a simple price action technique. So people who are already with me in my Telegram channel, so you already know that I was planning to post this video. So I hope this video makes a huge difference in your trading, and I'm sure it will definitely do, because this technique has improved my trading a lot. So before we begin, I just wanted to tell you all that so since this is a kind of a strategy, I've split this video in 3 different parts. Okay, so this is the part 1 that I'm recording right now, and maybe I'll record the part 2 in a day or 2, and then finally we'll have the part 3. But part 1 and part 2, if you understand the concept, you will automatically be able to trade them properly. All that you have to do is watch this video. Once you have done watching the part 1 and part 2, try and implement that in the coming week of trading. Whatever I have covered in this video, all that you have to do is identify those places, those demand zones and those supply zones, and even if you don't trade them, at least watch them. Once you get confidence and once you improve the kind of support or resistance that we find, automatically your trading will improve. And trust me, you will not find the one that I'm teaching you, will not find anywhere in the YouTube or anywhere in the book. So please watch it carefully. It's an effort that I'm putting into so that people can learn trading in a better way. So let's begin the video. So the video is basically on a price action trading. So what are the things that are required? So first and foremost, we'll only look at candlestick chart for this. And secondly, the important thing here is the volume bars. Okay, so apart from these two, we're not going to use anything. We're not going to use any indicator, no moving average, no option chain, and nothing. All that you have to do is watch the candlestick and the volume bar. You'll find a lot of volume based strategy, but this is totally different, and trust me, this will work most of the times. So advantages of this strategy is it will help you identify support and resistance. That's what we need as a trader. We need a buying area, we need a selling area. Then you will be able to identify the value buying and selling area. So why I have put this as a 2 different thing? Because support and resistance you will find on the charts everywhere, but apart from that support and resistance, what is more important is where should I go long and where should I go short. Okay, because the normal support and resistance, it can work just as a support. There are things like minor and major support. So minor support is once the price will test that support, and in the second time it will break it. So we are not going to look at those kind of places, but we are interested in a place where there is value in buying and a place where there is value in selling. Better risk reward ratio. Yes, trust me, you will get a better risk reward ratio, because this is a strategy I follow thoroughly in Bank Nifty, and this strategy I have only tested it on an intraday time frame, like 5 minutes and 15 minutes. If you ask me, like, will this work on a daily chart or an hourly chart? Maybe it can work, but I've never checked it, nor did I test it. So I've used it for whole and soul intraday trading. So in Bank Nifty, if you get this strategy in your mind, whatever entry that you will take, the SL will not be more than 20 or 30 points, and always your reward would be 100 points or maybe more than that. So those things I'll definitely cover in the second and the third part, like where exactly we'll buy and what should be a stop loss and what should be a target. So I'll cover that too. Best accuracy, yes, it has a very brilliant accuracy. uh, you know, I would not say 100% because there is nothing 100% in the market, but yes, once you understand this concept, you will get more than 95% accuracy, and it can be used on any instrument. You can use it on stocks, you can use it in Nifty, Bank Nifty, anything. So let's move further. So here is the strategy. Okay, so the first thing that you're going to do is you need to identify a short-term trend for intraday. Okay, so what you do is just open the chart, put it on a 5 minutes time frame or 15 minutes time frame, and just check what's happening in Bank Nifty for the last 2 or 3 days, whether it's falling or is it rising. That's all you have to check. So it doesn't have a lot of relevance though, but at least you will have a fair idea. Like if it's in a downtrend, then obviously we'll take an opportunity of sell on rise, or if it's in an uptrend, we'll take an opportunity of buy on dips. So that's what we are going to do. Step 2, so we need to identify a support. Okay, so once you get that support is when you know that okay, this is the place where I need to go long. So what you need for a support is 2 consecutive green candles. Okay, so listen to each and every word that I'm saying here carefully, because that is going to help you in understanding the concept properly. So you need 2 consecutive green candles, and the second thing is, with these 2 consecutive green candles you need rising volume bars. And similarly for resistance, we need 2 consecutive red candles with the rising volume bars. So I've put an example below, if you could see. So this is 2 consecutive green candle, and here if you see the volume bar, this one is small and the second one is bigger than the previous one. So this is what we are looking at and 2. Okay, so 2 consecutive green candles with rising volumes. And similarly for resistance, we need 2 consecutive red candles with rising volume bars. So this is all about the strategy. You need 2 consecutive candles with rising volume bars. So this is all about our strategy. With this strategy, we are going to identify the support and resistance. We'll also, in the second part of the video, I'll let you all know how to go long and which is the place you go long and which is the place you go short. Okay, so I hope you all understood. We need 2 green candles with rising volume bar for support. We need 2 red candles with rising volume bar for resistance. So now how to draw support or resistance with this. So we already discussed we need 2 green candles with rising volume. So once you get 2 green candles, we'll draw our support or our demand zone. Okay, so you can either draw a line just right below this, because this is the candle where the 2 rising bars got initiated, or if you see a reversal candle or a doji kind of a candle just previous to the rising volume bar candle, you can also mark that. So I prefer marking this, or in case if you think that the price is falling like this and there's a swing here and suddenly you see 2 green candles here, so I prefer marking this swing as a support. So that's how you improvise it. And Sometimes, you may see some price action on a previous day where it have taken support from here. So at that point of time, you can even try and match the area or match that line so that it becomes a proper support. So we'll discuss a lot of examples going forward. So the third part, I'm going to discuss a lot of examples. So here also we'll be looking at some examples, which is just so I think I've taken 27th of April and 28th of April as examples, so that it becomes easier for you all to understand, so that you don't have to go back in a longer time frame to see what's happening. So this is how we mark our support, and similarly to mark resistance, like we already know, we need two consecutive red candles with rising volumes, and in this case I've taken this candle's high as our resistance. So this is all you have to do. So I hope you understood this point. In case if you think you missed on something, just pause the video, rewind it back and play that once again. Now let's move on to the next slide. And the next slide will give you some examples. Okay, so this is 22nd. Okay, so why I have taken 22nd, this is basically to tell you all how the support and resistance works, because I wanted to show you the forward dates, that how it respected these levels. Okay, so let's check this quickly. So here if you see, the market open gap down, and here the volume was high, but we are not interested in this. We need two same color candles with rising volume, so that's what I have written, two consecutive red candles, and here we have two rising bars of volume. So this indicates me that there is an activity which is going on here. So let me just tell you why are we looking at rising volume bars. See, the volumes itself determines the demand of a script. Okay, so while there is a demand, obviously there will be people who are coming and buying more. That's the reason the volume is increasing. So we need increasing volume. That is what is important for trading. So we got to know that we have two red candles here, and we could also see a demand here. So in this case, it's supply, because it's Bank Nifty futures and the market is ready to fall. So now this becomes my resistance. So what I'll do is, so there are two things that can happen. Okay, the market can fall immediately, or the market can consolidate within this range for some time. And I am more interested in a consolidating range. Listen to this very carefully. So why I am interested in consolidating range is because then this becomes a sharp supply zone, because what happens is consolidation means either it's an accumulation phase or it's a distribution phase. Okay, so I'll not cover what is accumulation and distribution for the people who do not know, but just on a basic concept, understand that here big people have already entered and they're slowly gradually building up their positions. Okay, that's what we mean consolidation. In case if it comes fast down, then the possibility of market is it can reverse also quickly, because consolidation means a lot of positions has been built here. Hence, if the market breaks that range, the market falls significantly. But without a consolidation, if it goes down fast, that means it has the potential to reverse also quickly, because big players are not in this fall. That's what it means. So in this case, I'm just deleting this. Okay, in this case, we can see that Bank Nifty consolidated here. So you can write this point somewhere. So what do I consider consolidation? So this is a high, and this high should not be broken for at least next 30 minutes. Okay, write this somewhere or keep this in mind. So this particular high should not be taken off at least for the next 30 minutes. And if that doesn't happen, then you can be sure that people are building up their positions. So this time, see, after this two consolidation candles, we almost have 1 2 3 4 5 6 7 8 9 10 11 12 13 14 15 16 17 18 19 20. Okay, so it took 20 candles, which is about 100 minutes, so almost close to 2 hours. It took almost 2 hours to reach this particular resistance again. And when you see that, in such case, if bank nifty is again coming to the resistance, you can definitely go short here with a small SL. Okay, so I'll just keep about maybe 10 or 15 points above so that the SL doesn't hit, and I'll take an entry here. So either I can go for a call short or maybe for a put long. So you take an entry here, and what happened is slow and steady markets continued to consolidate and then finally broke it with the momentum, and this momentum even continued the next day with a gap down, and that's how the target has been achieved. So this fall was almost about how much points, let's see. So almost from 36,500 to 35,700. Okay, so imagine it was a 700 points fall. So in such cases, you can also carry forward your position for next day. So this is how strong it is. Since it consolidated here and gave a breakout, the breakout sustained and it was a brutal fall. Okay, now again there's a second example. So we have a resistance at place, we need a support too. So right now here, if you check this out, we have a big green candle and then a second green candle. Though this candle is a reversal candle, but we'll ignore it. All that we need is two consecutive green candles with rising volume bars. So here you saw that the market gave an up move, but the volume was decreasing with each and every candle. So we do not need any such things. All that we need is rising volume bars with consecutive green candles. So now in this case, I did not mark the green slow, but the candle prior to it, which is a reversal candle, I marked the low of that particular candle. So now this becomes my support. So in this case, 36,487 becomes our resistance, and our support is 35,889. Okay, so this is almost a 600 points range. So to have a better range, so 600 points is a bigger range. Okay, so we can just try and ensure that if we can get a level somewhere in between, that would be of a great help. So for that, what we'll do is we'll also see if we can identify a resistance at this place. So now I'm moving on to the next slide. That will help us to understand that we yet have another resistance. So in this case, so this is a continuation of the same chart. So this is the 25th. We saw this. Here we have two red candles with a rising volume bar. These are the ones. So I've marked this as a resistance with a black line. Okay. So next day, what happened? Market opened gap up. Okay, and that too above the resistance that we had. So this resistance was 36,487. Okay, bank nifty open gap up above this resistance. It tried to sustain. Okay, but what happened is all this consolidation did not bring a strong up move. That means the market is weak. Though it opened above the resistance, it managed to stay above the resistance for more than 30 minutes, but still it did not give a sharp up move, which indicates that there is some problem in the market. So all that we have to do is we'll wait for this low to break. So here it broke the low and then gave an up move, then again made a double top and again came down. So this happened. One of the main reason or core reason is a significant gap up. Okay, so we all know that whenever market opens with a very big gap up or a very big gap down, most of the time it stays sideways. So that's what happened here. But the main point in discussion here is this particular resistance that we marked. Okay, look at this. Market open gap down, a significant gap down, and then straight away it went up to the resistance. Immediately it started hitting the resistance and it consolidated. So this is a point that we have to look for, and here we'll take a favorable entry. So what I normally prefer doing is, so this was a gap down. So whenever there is a significant gap up or gap down, I wait for the market to settle down. Okay, I wait at least for about 30 to 45 minutes, or maybe 1 hour also. So once you're convinced and you know that it is not breaking the resistance, you can take a favorable entry. You can enter somewhere with a small stop loss, say like 20 or 25 points, and wait for a down move. And what happened with rising volume bars, the market started falling. So here also uh, we have two consecutive red candles with rising volume bars, which indicates that we saw pressure building up previously at the same place. We're again saying selling pressure, and then boom, the market went down strongly. Now what we need to see is, see, it broke a support. Okay, so this is something which is very important. People should understand this. So we retail traders, we make a very big mistake. What we do is, a lot of retail traders, they'll see if the market is breaking the support. Yes, it is breaking, then we retail traders try to enter here, and this is a place where we can be fooled easily just because the support is broken. So I always tell people that there is something which I learned from market is, never buy a put if the market is at bottom, or never buy a call if the market is at a resistance. We cannot break a resistance, or we cannot break a support. So it's a wrong place to be in. So what I always prefer is, at a resistance, I would prefer buying a put option. At a support, I prefer buying a call option. So now let's continue the explanation. So in this case, market broke the support. We saw a very big red candle. Okay, but then we do not have a follow through candle. Like, we do not have the further red candle. Immediately that uh, we see a green candle here. Immediately this fall has been stopped, and what the market did, it made a double bottom kind of a pattern. And in this double bottom, we can see two consecutive green candles with rising volume bar. This indicates that the market has not broken the support. Immediately buyers have entered and they are supporting the market. What happened? It eventually went up high until this resistance. So this is all about our strategy of two consecutive candles with rising volume bars is what we'll have to look at, and mark a support and a resistance and trade accordingly. So I hope you all understood the concept, what you have to look for. So even in case if I do not post the part 2 video tomorrow, don't worry about it. Whatever I have covered in this video till now, if you follow this, a lot of things would be clear even in the coming week. So my intention is to record a video uh, on Sunday. So let's see, because I have to record the analysis video too. So watch this concept, watch this video maybe once or twice, and understand the concept properly. Trust me, your trading would change definitely, and this will make a huge impact, and you can come out profitable. So what else I'm supposed to cover is, how do we see this in a call option or a put option, or how do I see that in a call or a put option is something which I'm going to cover in the part 2 video. And in the part 3 video, I'm going to come up with an additional thing to this particular strategy. So that is basically for people who are not strong with support and resistance, or for the people who cannot understand this concept so easily. For them, that's a kind of a added support. Okay, so that's what I said in the beginning. The part 3 video is not that important, but if you understand part 1 and part 2, then trust me, you are ready for a trade. Okay, I hope you will love this concept, and I need comments in the comment section so that I can understand that if you all like this concept or not, and this will motivate me to come up with more videos like this. So we are very limited subscribers, we are a small family. So when there is a small family, then the communication has to be better. So please do put your comments and feedbacks so that I can understand that yes, my audience or my Infinite Trade family is loving my videos. So definitely press the like button also, and try and share this video as much as possible, because this will improve a lot of people's trading. And after the 3 videos, I'll continue to post a lot of videos on the same concept to make you all understand, like when the market opens gap up, what exactly happens, when it opens gap down, what happens, and a lot of things I would definitely cover. Thank you for watching. Let's meet in another video. Till then, take care and have a pleasant Sunday. Bye bye.